I'm Kim Coriolis. I hope this message finds you and your family safe and well. Today I'm speaking with David Sheasby. David is Head of Stewardship and ESG at Martin Currie in Edinburgh, and we're planning today to have a discussion around the development of stewardship at Martin Currie and the industry in general. Good morning, David, to what I believe is another bleak and wet outlook in Edinburgh for the day.
Oh, I think the word we use here is dreich. So yes, a bit grim.
David, let's start by getting some insights into your thoughts about what do you believe stewardship means at Martin Currie?
I think, so first and foremost, stewardship for us is about investment. So it's about how we integrate ESG into our analysis. It's about, and very importantly, how we act as active ongoing owners. So how we engage with companies and how we cast our proxies, for example. But also it's about kind of working with our clients. So it's very much how we partner with clients and deliver the outcomes that they're looking for. And then thirdly, it's really about how we behave as a business. So how we run our business in a responsible manner.
And in your opinion, I mean, how has that evolved over time, and what are the challenges that you have seen in relation to that evolution?
So I think certainly something that we're seeing is an increasing interest from all parts of the investment chain. So from clients, from consultants, and also actually companies are interested in kind of how we're approaching this. We've been doing it for a long time, so we've seen this evolve over time. But there are clear challenges in terms of how for example, things like data. So increasingly, there's a desire to get data in a consistent manner. So that's clearly a challenge. A lot of that is being asked of companies. So companies are facing challenges in terms of what they disclose, how they disclose, and for example, they're being increasingly asked to demonstrate resilience to climate change and how they're approaching that. But then for the industry overall, there's also the challenge of regulation. So regulation is evolving. There's a big focus increasingly on outcomes, and certainly that plays into our reporting, for example, our stewardship reporting. But that regulation is also really focused on the asset management industry now. And while a lot of it is well-intentioned, I think it can lack pragmatism.
And before we get into specific details about climate change, can I just get your views on, the relationship that you have with the PRI and what sort of involvement do you have there?
So we were relatively early signatories to the PRI. So we signed up to the PRI back in 2009. We have been quite involved in, for example, some of their collaborative engagements. So we were early to getting involved in that, and that's particularly because of our experience, for example, in emerging markets and the way we approached engagement. So that we found those very useful, and I think through that, basically I've got involved, for example, with what was the ESG engagement committee, but it's now the stewardship committee, and so that's kind of evolving in terms of how that's shaping active ownership through the PRI in future.
And what do you see the role of the PRI being? I know, that there is a number of different views as to what the PRI stands for, and we've had many discussions with clients and industry bodies in the past about whether or not it's just a box ticking exercises when it comes to the fund manager community. But do you believe there is a really significant role for the PRI to play?
I think the role of the PRI is evolving. So initially it was about signing up the asset managers and asset owners to an approach to responsible investment. So basically committing to engaging and to committing to integrating ESG. But I think what you've seen over the last few years is that the PRI is starting to, as I say, it's focusing more on outcomes. So it's looking at the so what. So, okay, you signed up, but actually what are you doing and what is changing? It's also perhaps got a little bit more teeth in terms of originally people would sign up, but now actually the PRI is starting to kick people out if you don't effectively meet minimum standards. I think it's definitely evolving, and you know, there have been some positive outcomes in terms of some of the work that has been done, for example, through those collaborative engagements. And you know, one of those major engagements, for example, is the Climate Action 100, which we are participating in, and the PRI is a kind of big sponsor of that, and we've already seen change at companies on the back of that.
And I know in the past, in your previous roles, you were a portfolio manager. So in this current role that you have, you know, what value do you see in working with the investment floor at Martin Currie? And, you know, what kind of investment tools do you see, and are you trying to work with the investment floor to develop when it comes to this whole concept of sustainability?
So I think first and foremost, we always believe that it should be the investors who are the people who integrate ESG. They should be the people who are leading on engagement and active ownership. And you know, that's always been our philosophy, and that's my background. So I come to this very much as an investor. I've been in this role now full time for 5 years. I ran Money, as you say, for almost 30 years, and one of the things, so my role is really about kind of guidance and oversight, and kind of working with investors on particular issues or helping with particular engagements. But the day-to-day responsibility is very much with the investment teams. And in terms of the toolkit, so one of the things that I've thought about over time is just like, well, as an investor, what do you need? Kind of what information do you need, and how do we evolve how we report back to clients? So, for example, we set up industry frameworks back in 2015, looking at what kind of factors are material for different industries. Then set up, for example, most recently, we've been looking at things like the Sustainable Development Goals. So how do we begin to map some of our companies to the Sustainable Development Goals, which is an area that clients are interested in? And also on climate change, how do we think about the sensitivity of the portfolios to climate change and build tools around that?
And then, you know, the two areas that you've just talked about there, SDGs and climate change. I mean, how do you see the work that you're doing there supporting investment returns?
So I think, you know, climate change is one of the key challenges that we as a global community face. But in that, it presents clear risks. So we need to understand those risks, and we need to be aware of how companies are managing and mitigating those risks. But also climate change presents opportunities. So it presents opportunities in new technologies, in companies that can help mitigate the impacts of climate change, or address the impacts, for example, of physical impacts of climate change. So it's about risk, it's understanding about risk, and it's also about understanding where the opportunities are. I think the SDGs, they've been described as a kind of blueprint for the planet, in terms of thinking about what we're trying to achieve over the next, well, it's really only 10 years now, out to 2030. And again, to support the Sustainable Development Goals, there are immense opportunities and immense investment opportunities that are presented. And so one of the things that we're looking at is to what extent companies are able to contribute to those through products that they produce or are innovating on. And again, that presents a real opportunity in terms of how companies might move forward on that.
And David, how realistic do you believe the SDGs deliverable of 2030 actually is?
I think they are, it's clearly ambitious. So there are some very ambitious targets in those. So there are 17 goals covering everything from poverty, inequality, climate, water, land use, etc. So they are very ambitious. I think, you know, governments all signed up to them back in 2015. So the governments in theory are committed to those, but they do require huge amounts of investment. And I worry that we won't achieve that. I mean, I think there's nothing wrong with setting a very high ambition. I think they will be a struggle to fully achieve.
And you and I spend a lot of time in unison talking to our clients globally. Can you give our viewers a sort of a sense of what are some of the main themes that you see around engagements when we're dealing with our clients?
So I think climate change is clearly one, and that's high on clients' agenda. They want to understand how we're approaching climate change on their behalf. How do we identify the risks? How do we identify those potential opportunities I talked about? And increasingly, I think that we're seeing clients wanting more detail. So understanding really the granularity of some of those things, and that's great. That's fantastic. And the other thing is, I think this will be accelerated by the impacts of COVID, but I think there's an increasing focus on the S. If you think about ESG, so environmental, social, and governance, I think there's an increasing focus on the S, particularly around how companies approach their key assets in terms of their workforce. And there's been talk about that through this crisis in terms of how companies are looking after their people. But then also things like human rights and modern slavery, which very often sits hidden in supply chains for companies. And again, that's a kind of key issue, I think, for clients, and increasingly so.
And finally, David, your views on maybe engagement with clients around moving to a new low carbon economy.
So I think we've done an increasing amount of engagement around this. I think one of the things that we've seen a number of clients do is kind of set out their own ambitions in terms of how they want to align their overall portfolio. So very often we run a part of their portfolio, but they're looking to align their overall portfolio with, for example, Paris-aligned ambition, which is effectively net zero by 2050. We need to be very clear in our minds how we can help the clients achieve that and what contributions we can make. So those are increasingly just the types of conversations that we're having.
Well, David, thank you very much for that. I thoroughly enjoyed that.
No, well, thank you. That's great to see you, and I hope the sun will come out eventually here. So.
And to our viewers out there, I hope you enjoyed our discussion with David Sheasby, and stay online. Thank you.